What's up, everybody? The markets are shaking up and down and all around, shaking people out. Are you getting shaken out right now? I got some signals that show that we may have an opportunity for, it's going to be opportunity for people with strategy, but a lot of sideways price action could be in play for this summer. But we could also get that major breakout. What are we doing to stay prepared? What are we doing right now? What targets do we have to the downside, or is it about to bounce? Let me know what you think in the live comments right now. We're about to jump in. I've got some great charts, some great signals, and you know what? This is all about community. Let's do this together. Let's grow our portfolios. Let's not get so worried about what's happening in the short-term time frame right now. I got some great signals to show you what's going on. Everybody hit that like button, and if you're ready to get this going, throw a 1 in the live chat right now, and we will break it down. What's up, everybody? Good morning, good afternoon, good night, wherever you are tuned in from. It feels like a scary day today. We've got the markets breaking down. It feels like it's all over. We see Bitcoin is down to 60,000, just above 60,000, about 60,200. Ethereum under 3,000. BNB about 520. Solana down to 128 just a few weeks ago. It was over $210. XRP down to that 47-cent mark. Cardano, 43 cent. Am I scared right now because I have some coins where these prices are under their entry points? No, I find this as an opportunity. I find this as that moment where we can practice some patience. Let's look to where this market's going. I've got some great signals for each and every one of you. So if you are here before everybody else. The people haven't started rolling in yet. Hit that like button, hit that subscribe button, ding the bell. We got some things to talk about. We have some really important considerations that we have to look at so we don't get caught in the shuffle here on the market. It is losing this key level, as we can see right here. Price action losing. I kind of redid some trend lines, cleaned up the chart so we have something clear to look at. But as we can see, we are losing this key. We're kind of in a downward channel here. I mean, all the way out here, you could draw it. It would be a falling wedge, but I'd look at this more like a little bit of a falling channel. It still could be considered a bit of a bull flag, but the flag is almost as big as the pole here. So what do we make of this? This M formation within another M formation within another M formation. And even within that, another smaller M formation. There's been bearish signals throughout this entire time frame telling us that there's weakness coming in on multiple different time frames at these levels. And we see now these wash out to the downside. So what do we do? How do we prepare when markets are crashing? Do we jump out the window and just completely capitulate and sell because it's about to go down and we want to take advantage of lower prices? Unfortunately, that's what these markets want you to do right now. These markets want you to capitulate so you can donate your money to bigger players, to smarter players, to people with more patience. These markets are designed to move the money from the impatient to the patient. So does that mean we just watch as the market burns down, or is that even happening? Let's take a larger, more macro picture of what's going on so that we can stay prepared in this market, because I think opportunity is only setting up right now to really, really take advantage of what's coming over the course of this next 12 to 14 months. So with that being said, let's look at these signals. We see Rafael Federico says we buy. That's right. That's what's going on right now. So let's look at this. Let's talk about what's going on. This is how right here, this is how a lot of people are feeling right now. And I want to talk about this. As silly as this may seem, this is how a lot of people are feeling right now. It's like, God dang it. Thought it was supposed to go up. I finally bought it. It was going up. I felt great. And now it's crashing again. What do I do? Oh my God. It's so frustrating. In fact, let me actually pull this up. In fact, I posted this yesterday. Let me go to my X account, x.com, and I posted this kind of as a joke, but a lot of people are feeling like this right here. Bitcoin and crypto, although it moves fast, and I feel like I have a good idea what's about to happen. I mean, come on, the patience game is really testing me. Yeah, even me, a guy that's been in the market, because we have to realize these markets don't just move up or down. They chop, they go sideways. They have huge pumps that get everybody so excited only to then break down. So the question is, if you are feeling if you're feeling in any way like Kermit here, just like frustrated, take that as a signal about the greater sentiment within the broader crypto market. And maybe there's an opportunity at play here for those that can, one, either be patient, or two, have a conviction for a time frame over the period of the next 8 to 16 months. There's no telling how long the bull market's going to last. This dip right now is providing opportunity. We have some signals for that we're going to go over right now. Where is Joshua? Joshua is in the river of Qatar or Dubai right now. He's over there, but we got some things to talk about here. What's up, my people? And everybody, love everybody, says R. Anthony Vance. So, or Anthony, I guess. But let's talk about this feeling. What signals are actually provided for us to understand what's going on? Bearishness. Everybody's so scared. Feels like the end of the world. But let's talk about this. The bearishness on Bitcoin at $60,000. Remember, we're still at 60. Yes, we've pulled back from 74, but we're at that $60,000 mark. Even if we have a dip down, and I have some levels that you might not going to want to see, but you need to see them because you got to be prepared. Even with the dip we have, we're still at this level days before the halving, and people are bearishness. And Brandon here says it's hilarious. Why is that? Well, just a few months ago, a lot of people, not just him, a lot of people thought we'd be doing great to hit 48K buy, not even up back down, but just finally up to 48K by the halving. So in context, with the market having pumped as it has, let's go to the 3-day chart. Let's turn it on. Just looking at what's going on here, we can see this huge upswing. And now people are frustrated with this little bit of a dip right here. Well, let's look at this dip right here. 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 You get my point. What is happening here is a necessary context of what a bull trend is, which is rise, retrace, continuation, scary retrace, continuation, consolidation, continuation. It comes in many shapes, many different sizes, many different time frames. But all in all, what we are doing right now is ultimately incredibly bullish for what we're seeing as to where the market may be going. So let's not lose our minds. We're into this zone right here. What does this zone look like in previous cycles? Well, look at this. Well, look at this. Well, look at this. And what do you notice about all three of these previous cycles post-halving? Incredible upside. So if you're frustrated right now with this minimal downside, with this minimal downside that we're seeing right here, yes, this is an information. It does signal that we potentially could go lower. But even if we came lower, we're still well within what we're seeing in this chart right here. And we're testing levels that kind of people have been baffled about over this entire last year, to January 2023, all the way till now, almost a year and a half now, with upside with only 20% drop. So where are we at right now? That's what we need to ask. Where are we at right now? Let's come over here to the, it's this tool right here. Go to price range. Let's go from the top right there. I'm just seeing where the top of this range is, coming down to where we're at right now. Okay, right now we are currently, let me just go ahead and move that over. A little over 18% to the downside. But let's put this into context. Putting this into context, let's see what we had on this one. And yes, some of you all know this, but we need to remind ourselves what the hell is going on so we don't have a conniption fit, because we're seeing things that are normally happening, not only in previous cycles, but also in this cycle. And the fact that we've only had these, 20, 21, 22, 18% drops, we're seeing it again right now. We're like, oh my God, it's over. I mean, let's look at this. I mean, the context, the previous price action is telling you what the norm is here. So we have a minus 22, minus 19.9, basically about 20. This is going to be a little bit of variation based on where I drew it, but roughly 20%, 1, 2, 3, 4. And we're still over here in the same sort of range, minus 18%. So let's see what that, coming down into that short-term order cost space, it's about a little over 20%. Coming down to that next level down, that's about 28%, almost 30% down. Now, what is this level? Why did I draw a level here? Remember, when we're trying to figure out where price action can go, ask yourself, where has price action been? In this case, price action had some trouble at this zone right here. Where you see trouble is where you're going to see a magnet for price action for potential resistance or support. In this case, we have a giant M formation. In the event that this does break down and continue to the downside, which can happen, we've had an absolutely exuberant price action to the upside, yes, with shakeouts along the way, but minimal shakeouts, only 20 in the 20% ranges. So if we do get a larger pullback, which we have gotten in all previous cycles, in fact, we're still talking about this consolidation that we had in the previous cycle in November 2020, coming all the way into December, about a 30 to 40 day sideways price action before this actually moved up. And this was the previous all-time high. We are doing the same thing currently. That structure hadn't changed. This is a previous all-time high. We do this, option J. You see, we are doing exactly the same thing, consolidating at this level. Now, we do still have this range. We're still within this range. It's all going to depend on these candles, where this daily candle closes. If we close below this, then that's going to give a stronger indication that we're going to move to the downside. If we look at this on the 4-hour time frame, you can see we have 15 minutes left before this 4-hour candle closes, and it's going to start painting the picture. If we close below this and then we close the next one down, that the bears are starting to really gain control in the midterm. But as it stands right now, this is scary, but there's nothing out of context from what we've seen in previous cycles. And we come back out to the 3-day, double click on the right to put it in auto mode. We can see, I just want to re-emphasize what's going on here. What is this drop? 56%. That's not considering the COVID black swan. So if we consider that all the way from this top, all the way to the bottom of that COVID black swan, that's over a 70% drop to the downside. Okay, what did we see in the cycle back here in 2016? Coming back here. All right, well, we had this move to the upside all the way up to this wick that came down. It's 41% drop. Okay, well, then what is this next move right here? Next move, boom, all the way down to there. That's 23%. Okay, so we had a 40% drop followed by a 24% drop, and then we came into the halving. Oh, the drops are done. This is why this is so important right now, because we're 2 days away from this halving. Okay, 2 days away from this halving, and so we did get 2 large drops pre-halving, and then across the halving right here, 40% drop that persisted through the halving. And I want to show you something that's going to be very important when understanding what may happen. You're never going to know what's going to happen. You can plan for the most likely scenarios so that you can be in position and not be held hostage by your emotions. And in fact, because we know this, we've seen this before. In fact, even before this, we had this one as well. How can we leave out all the dips? 38% drop, 41% drop, 24% drop, and then the halving, 40% drop. Okay, work being done on the way up. Everybody wants to believe this time is different, and we're seeing work being done on the way up. Got the 20% drop right here on the ETF approval, and then launch. So I want you to notice the second half of that. Drop, then launch. Now, there's no telling what's going to happen here, but in order to get down to this level, $52,000, $53,000, essentially that's the next level that price action had trouble getting over. So let's look at another chart here. And I didn't change anything on this. This is a chart that I've had drawn for some time when price was over here where this started. And we're seeing the price action potentially come down into this zone. 2 levels. I'm actually going to delete these lines just so we can see it more clearly. This level is the first target that we had drawn for some time now. Why did we draw it here? Because this is essentially the intersection of this rising level of resistance here. See, touch, 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 all rejections. And then once we broke out, we found support on it, giving this line a lot more conviction of, this is an area we need to watch. So as this projects further up, this sort of cross section right here is a target level that we want to watch for a potential pullback. And what are we getting? We're getting that potential pullback. Or we're getting not only the potential, we're getting the pullback right now. Let me move this out of the way, move this down into this zone right down in here. That's a $56,000 level. Now, remember, we have several lines on this chart, and I've had these drawn here for probably 5 months. I don't know. It's been a long time. I've had this whole channel drawn here. I think all the way somewhere around here is when I drew this. So yeah, about November to December. The next level down is down here. You see this rising level also of previous resistance and support and resistance. We know this is a valid line. So let's project this out a little bit further. I'm just trying to make sure these two levels right here primarily still touch. The next level down, command copy paste. Next level down, see, is in this $52,000 range. And when we look at this chart, we're using different types of methods of analysis to see if there's any grouping of areas that we want to watch that are finding confluence with different types of analysis. So now on this one, let's go ahead and delete this line. Delete this guy. Delete this guy. Delete this guy. All right. Now zooming in here, we can see this is that next level in the sand. So now this is just price action levels. It's in this from here, 50,300 up to 52.5. So would you say that's right around that $52,000 level that we just saw on this chart right here as well? 51.7? That is right smack in the middle. In fact, we can see this if we draw a box across this price action right here. Look at that. So we have a horizontal level based on price action, a rising level of both resistance and support, and resistance and support and resistance. So we have these two levels marked out as potential downside actors. Now, does this mean everything's over? No, it doesn't mean everything's over. It means we have a damn map in case it goes there. And we know based on the buying pressure and the global awareness and all these new capital channels coming in, this should excite you. Now, coming back over to this chart, we got a couple things to look at. More bullishness. Yes, there's some FUD in the narrative right now. We got geopolitical tensions going on, potentially escalating. Is it not? Who's going to be involved? You got Russia, Iran, US, Israel, Lebanon. There's so much going on right now. And it's right around the halving, very similar to when we look back. And now, of course, remember, this is different than 2020 when we had this sell-off. But we tend to get some sort of huge thing that happens around this time. It's almost as if there's a timescale program for when crazy global events happen that we call them black swans because we don't know what they're going to be or when they're going to happen. But it's funny that we get these things happening right around this point in the global liquidity cycle that also overlays with the halving cycle that also makes us feel like, oh, I need to get out of this because the market's going to be over. And then when you get out, smart money buys, and then this launches and you go, what the hell did I do? Now, coming back over to this chart, we got new South Korea, Japan, and Singapore could approve Bitcoin ETFs and follow Hong Kong's lead as Asia catches up to the US market. So there's only going to be more capital flows that come into this space. So are you selling? Really? Then we see this is something that I've also been pointing. This is another way to look at it. We got to look at different types of charts that sometimes show the same thing because different people understand different visual assets. So all eyes on the Bitcoin short-term holder cost basis. I've been saying this for 2 years. I watch this as a very key metric when I'm trying to understand trends and if we're strong or weak in that trend. Now, that short-term holder cost basis is at $58,900. A test of this level is seeming more and more likely as the days progress. Well, let's look at this. Bounce, bounce, a little deviation, bounce. We're coming down somewhat into that level. And I've shown you before. Watch me on a daily basis. Get in here. We got a great community, and I'd love to welcome you in. By the way, a special shout out to every one of you community members. We broke over 30,000 subscribers. I don't know, ever since I did the Mark Yusko interview, was it about 2 weeks ago, 3 weeks ago now? The channel has just been on a steady climb. I don't know if it put me in the algorithm or what, but big love to each and every one of you. Just really honest. I'm honored to be here with you on a daily basis. Hit that like button, hit that subscribe button, ding the bell, be here with us. And if you don't know who I am, if this is one of your first times here, my name's Kelly Kellum, and I'm honored to be basically shepherding this community and giving you guys those tools and resources and keeping you in the know so we can stay ahead of these trends and not get shaken out if somehow we make a silly move or we get impatient. It's all about structure and strategy so that we can absolutely dominate it in this space. So let's continue on. I got some great charts to share with you. Now, coming on over here, this is a little bit when I was talking about this summer chop. Everybody, right now, we're so myopically focused on what's happening on the 1 hour chart because we see a big red candle. Zoom out for a second. Reduce your stress for a moment. See where we're at in the market cycle and that there's so much beauty and magic and profits that are on the way for those that can be here for them. And in order to be here for them, you have to not be reducing your capital with every trade you make because you're getting held hostage by your emotions. Now, I'm talking about everybody wants this price to go up, or when's it going to drop, or what levels? Well, let's talk about a potentiality here that we have to be aware of for this summer. Sideways price action. In our opinion, BTFD dip is below 55,000, says Stock Money Lizards. If you're not following them, make sure you give them a follow at Stock Money L. And this is what he's talking about, this Wyckoff distribution. By the way, if you don't know who Wyckoff is, this is important because this is how entrenched the psychology of humanity is within these charts and why they are somewhat predictable. You can't perfectly predict them, but Wyckoff was a gentleman that basically was seeing patterns in trading markets, I believe, in the late 1800s. That's right, Wyckoff method date. I believe, who created it? Yeah, so let's see, Wyckoff rules and blah, 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 blah. It was a long time ago, whenever it was. It was either the early 1900s or the late 1800s. But the point here with this is the fact that there's certain patterns that regularly replicate themselves in these charts that can give you an idea of what's happening. And this is where this idea of chop comes in. And when you realize that the markets are literally moving in mechanism type ways that efficiently shake weak hands out of the market. And the fact that Bitcoin is as volatile as it is, because it is a somewhat nascent asset globally. It's only now gaining very wide recognition. It makes it even more ripe to have these mechanisms shake out these weak hands. There's people, I'm curious right now. Anthony Vance says, thank you for all you do, Kelly. The alpha and the information is so valuable. I appreciate you. Every time you guys give a positive comment, it really, it makes me feel very honored. Now, I don't even remember what I was saying there. The Wyckoff method, the shakeout. Don't get shaken out. I don't even remember what I was going to say. But looking here at these mechanisms shaking people out, it's bullish impulse. Okay, let's see where the bears come in. Bullish impulse, but they're getting weaker. The bears come in. We get this very regular pattern, and we can see if we overlay this with what's happening right now, there's a signal that there may be an opportunity with that price coming down. Now, remember, we just look at technical analysis with price action levels, horizontal and vertical. And we also looked at that pattern. And we also looked at those rising channels that offer levels of both support and resistance and prior price action. And we're looking at where all those levels intersect that give us a heightened expectation or heightened analytical view of a likelihood of price action finding support or resistance at those levels. Now, we also have this distribution pattern, meaning money is doing everything it can to get people to go higher, and they get to sell out, and the bears come in, and they get to go higher to get out again. They get out again. So they're distributing their profits across this entire time frame until ultimately, as they distribute it, the market structure becomes weak because now you have all the people buying the hype, buying hype. Now the people that want this to go up that are actually trading are saying, okay, let's send it lower. And this is what happens, because then that conviction is lost because of the distribution of the type of holders that are out there. And we do have that setup that's potentially happening here. We see this pattern suggesting a move down, where down into this 51 to 53,000 region. We just outlined $51 to $53,000 region. This is right at that $52,000 mark. So there's multiple different types of things that are suggesting that this could happen. Now, there's a bigger picture here as well. If we look at this right here, we can see, despite the clear bullish signals or signs mentioned here, halving, the new all-time high, these are all recipes for bullish speculation that have also driven price up to where they're at, in addition to all the ETFs, okay? there are some strong signals that we might see a midterm correction here. This is from Stock Money Lizards as well. Depending on the news flow, this might be more or less abrupt. Bitcoin dominance will rise, altcoins will drop. Understanding this, and look at where he's got the target as well, right here at that $53,000, $53,000 level. So we're seeing some confluence at its signal down there. Now, if it becomes too obvious, then a lot of people trade that direction, and you see the majority of traders trading shorts or getting out or capitulating, and that's also a signal that you might have a reversal. So let's pay attention to this level, and let's look at a couple more charts, and we're going to dive in here. Wyckoff summer. Remember, I was talking about this potential sideways price action through the summer for Bitcoin. Now let's look at how this is a broader Wyckoff reaccumulation. I'm thinking this is very low probability, but you never know. But there is a possibility here that this could be distribution, meaning it's going to send price lower. It also could be reaccumulation, which I think is much more sexy. And that would be a reaccumulation would be something like these, where you have, it's hard to see it, but you have, although we're at a top, or it feels like a top, having the price action chop, and then you get a final washout to the downside and then launch to the upside. Now, does this happen regularly in cycles post-halving? Well, let's look. Okay, here's a halving. What did price action do on all three previous cycles post-halving? Yes, we talk about the upside all the time, but that's the macro picture. If we were looking on the midterm structure on all of these, we can actually come back over here. You can see them lined up here. Here's a halving. What's price action doing? Chopping sideways. Now, coming into the actual Bitcoin price on the price charts, and we see with the halving, what did the price action do from basically this point all the way across until we broke past this structure high? That is 165 days of sideways price action with a huge range that shook people out. Now, this is a range that comes from, at this point, we actually come up to here. We have a drop, about 14% drop. Then that was followed by a massive pump here. That is a 34% pump. Oh, it's 37. The market's going all the way to the moon. People go long at the top of this wick, only to have this then reverse and come back down 21, 22. And then it launched. We also can see in this cycle back here. So here is the level. We can actually do two levels. We're going to do option J. Option J. If you're on PC, it's Alt J. That gives you this horizontal ray, so you don't have to click on the tool every time you want to use it. And by the way, on that note, make sure you head over to the BitLab Academy YouTube page, youtube.com/@BitLab Academy. And if you come down here to the daily alpha, click on watch this pro trading view guide. I'm telling you, every single one of you, if you haven't watched already, it will show you how you can set up the templates so you can go between your different indicators and your different setups and all this stuff with just one click of a button. And you can also set up all your times across the top, and you can set up your list and also all the quick keys, option H, Alt H for PC, for a horizontal, option J for a horizontal ray, option V for a vertical line, option F. When I say option, if you're on PC, it's always Alt. So Alt F, and then you have a Fibonacci. Very, very, option T, Alt T, gives you a trend line. I'm telling you, I'll teach you how to really dominate this space, TradingView. Now, coming back over here, what do we see? We're talking about sideways ranges post-halving. Well, look at this. All the speculation into it, sell-off. And so even from here, it took from this point right here. We can go from here if we want. We'll measure this across. This took all the way till here. This took 183 days before we broke above this range high that was just prior to the halving. If we talk about price level at the halving, which would be, you know, basically roughly about right here. Let's draw this down a little bit. This took, I'm pressing shift and then just clicking on the chart that gives you a measurements tool. That took 102 days. So somewhere between 100 and 180 days in this cycle in 2016, we had sideways price action post-halving. We just talked about what we saw in this previous cycle right here. We had a pretty good amount of sideways price action from here all the way over until we really got going, 156, 100. So there's a strong possibility, as bullish as things are. We have these geopolitical tensions. We have all this stuff saying that, okay, things might get bullish again, and they will. The question is going to be when and how low do we go before we get there? We're testing this $60,000 mark right now. We're coming into the box that we've had drawn on this chart for several, I mean, at least till back over here, we've had this drawn. Now we have this target down here, and we do know that that short-term holder cost basis, which I've had drawn on here for quite some time. I've been tracking this. I've been sharing this with you for over a year, moving this short-term holder cost basis up as we go, because this level regularly gets tested in bull markets. We're not even questionably bearish until we break with conviction below this level. So know that. But also realize that there's so many bullish things at play right now with all these ETFs, all this capital flow, all this positive growth in the fundamental dynamics of Bitcoin globally, that there's possibilities for breaking of trends that have happened in the past. And the reason I say that, if we come back over to this chart right here, let's come over here to short-term holder cost basis. I just want to re-emphasize this. I have to click things 4 times for them to work. There we go. Now, this was a deviation below the short-term holder cost basis. This is not a very normal thing in bull markets. So I do expect that if we break below this, I'm not saying the bear market's here, this entire rally's over. I'm going to look to this example that things are so bullish that there's going to be new players coming in. There's going to be heightened emotions around what's going on, and there's going to be a strong possibility for shakeouts in both directions. We had a large separation here from the price to the short-term holder cost basis. We can see that reflected on this image right here. This is graphing the distance between the price and the short-term holder cost basis. Short-term holder cost basis, every coin in circulation that has moved within the last 155 days. Think of it like short-term holder cost basis is like playing hot potato, okay? Once a coin has been sold within 155 days, it is significantly more likely to be traded again than something that's long-term held. Has to do with psychology, has to do with market. At the end of the day, it's just statistics. So this is why we pay attention to this in trends, and especially with Bitcoin and bull trends and bear trends as well. But this deviation, we could get that deviation, and this deviation here coming down to that $53,000 level would be below the short-term holder cost basis, but ultimately I think would still provide incredible opportunity. Now, looking at where we're at right now, Bitcoin has arrived at one of the most, Bitcoin has arrived at one more of its recurring tests where demand must prove itself stronger than the ample supply, which activates new highs. In each instance, investors are surprised when momentum finally runs out. It's not a question of if, but when. Yes, we will have a top in this bull market. Did it just happen? Was it a short-term top? Because remember, I used to talk about at the beginning of this, when I started doing this stream last year in January, this channel is only about a year old, everybody, a year and 4 months. Now, I've been in the market since, I don't know, 7 or 8 years now. But I've been sharing with you since I started this channel about the I call it the 3 market strategy, 3 cycle strategy. We need to look at the macro, we need to look at the midterm, and we need to look at the micro. So we may have just on the midterm topped out, and that's okay. We had a midterm top out here, and look how much higher we went in the macro. We topped out here, came down, look how much higher we went in the macro. Smaller time frame, top out, breakdown, top out, breakdown. But then the macro, these are the tops. But then when you look at the real macro, we haven't topped yet, and we're nowhere near it ever, because this has been one macro bull trend with a rise, retrace, continuation. Retrace, little consolidation, continuation. Retrace, continuation. That's the funny thing. We get so locked in on not understanding what people are talking about when we're talking about a top, a bottom, because everybody's looking at different time frames. So let's call things what they are. In this case, what we're seeing here is the value days destroyed multiple. I've shared this with you all many times before on this chart, on this channel. This is one of my favorite indicators, and this is actually developed by TXMC, if I'm not mistaken. This is the value days destroyed. When you have a coin, if I give you a coin, and you're holding it for 5 days, I give you 1 full Bitcoin. You hold that coin for 5 days, that's 5 value days. If you sell that, you're destroying 5 days, all right? This is somewhat theoretical, right, when we're trying to understand this concept. But essentially what this graph shows you, when you have this large spikes, it's showing you a lot of coin days are being destroyed, meaning coins that have been held for some time are moving, AKA coins with smart money buying lower, they're starting to take profit. Now, does this mean it's the end of the cycle? No, not at all. What this indicates is that we're clearly in a very strong bull trend because smart money takes profit into the strength of bull trends. And this tends to happen. Let's see where this spike happens. Here's a previous all-time high. And then once we start pushing up, this is where those long-term held coins are starting to exchange hands. And then you get a blow off top because now you have all short-term held, basically weak hype cycle buyers. They're buying the hype, not buying the data. Now, what do we get? Previous all-time high right here. And then just after this is when we get the spike. So then this explains also this rounding top we had right in here, because all these long-term held coins, huge spike, now is rotating the composition of the type of holders in the market are rotating from a lot of long-term holders selling to a lot of short-term holders. So now you have weakness. And then we have this chop down. So does this mean it's over? No, it's indicating that we're basically hitting up in that previous all-time high. And some people are taking some of the profits. Some coins they've held much lower. Some of those coins could have been bought here, 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 here. Some of them could have been bought here. Some could have been bought way back here. All we know is that a lot of coin days are being destroyed. So that means long-term held coins are taking profit into the strength of this trend. Now, spent volume, 6 months to 5 years. See a very similar sort of story here. Previous all-time high here, post this, as this comes up, we're getting those coins, spent volume, 6 month. This is basically isolating not just the super OG 10-year held coins, but also not coins that are short-term held coins, which are under 5 months, right? 155 days. So this is the tranche of the majority of those coins. So it's kind of similar to that VDD, the value days destroyed. But we're seeing similar things where we're having a lot of those coins, the volume on those coins is moving once we break past that previous all-time high. Now, this is getting lower and lower and lower. So this, we'll just pay attention to this. But the point here is that we are seeing similar things happen that have indicated that we're kind of midway up in this, midway on a time basis, not on a price level basis. Now, transfer volume ratio, look at how high this is, almost higher than we've been back here. So we're seeing a lot of very similar things. Now, this is interesting. The entity adjusted MVRV, market value to realized value, the price we're trading, which is this Bitcoin price, to the realized value, right? And this is showing the separation of the market value to the realized, basically the cost basis of every coin on chain, the average of the last time it moved. When you get these large spikes, it tends to be when you get the market cycle tops. Now, the interesting thing here is that we do have a downtrend level of resistance here. Now, I wouldn't specifically trade on this, but it's an interesting acknowledgement seeing that we've come up into this zone that has created, even if we don't take these into account, 1, 2, 3, it's going to be interesting. And it actually talks about how different things are right now, because I am of the belief, and you could disagree with me, that this will likely break. And because we are ushering into a new era of what's happening in the crypto space with the capital access points globally, giving it some sort of permission to go and run free, right? So we're going to have to watch what happens when we break through this, meaning the price action really starts getting moving, and it's going to take that separation of the market value to the realized price. Now, similarly, this is the MVRV as well, momentum, and phenomenal chart from Ali Charts. I said here, identifying Bitcoin price dip buying opportunities. So we just talked about potential price action targets to the downside. So why are we talking about buying the dip? Because you never know when that reversal is going to come. We're at a very key point in time right now. that literally anything can happen. So all we can do is stack our probabilities. So let's look at this chart. And this is why DCA is so important. Dollar cost average. You don't need to say, oh, it dipped, let me throw everything in. You say, okay, it dipped. Now we're getting into zones where I can start layering in money that I've been putting aside. So when we look at this, what do we see? Bitcoin MVRV momentum has helped identify buy zones since the bull run started. When the MVRV, remember market value to realized value, dips below the 90-day average, it signals a buying opportunity. After the latest correction, the MVRV dropped below the 90-day average again, hinting that although Bitcoin might see further declines, what did I just say? Now is a great time to consider buying in. So what is he talking about here? Here's the Bitcoin price in black. This color right here is the MVRV ratio that we were just talking about, that separation of Bitcoin price that you're trading versus the realized cost basis of the coin. When this dips, see this? It dips just briefly below here. That was a great opportunity. Price action is moving down. The MVRV starts dipping below the 90-day average here. So all of this period was great opportunities to buy. If you bought here, it doesn't make it a bad buy because it dipped lower. It just means this is one of those indications of having dry powder, but also layering in once this happens. Okay, again, dips below. This entire period was a great buying opportunity. Dip below right here, almost at the peak drop here. Great opportunity. We have dipped below this again, presenting that opportunity. In fact, this would probably be a bit lower because this was from 2 days ago. I just didn't stream yesterday because we got a lot going on in the background. I'm trying to get things, some really cool things in order for you all. But this is saying, are we focused on the price or are we focused on the data? That's what we always have to ask ourselves. And then we see right here, Bitcoin key stakeholders aren't budging on their holdings, despite the concerning volatility that brought the top market cap cryptos market value as low as 61.5, basically talking about Bitcoin, that brought Bitcoin market value as low as 61.5. Now we're down in the 60s, right? Over the weekend, with FUD circulating among traders as market close in on April 19th halving. This is how the following notable whale groups have behaved since March 1st. That's where all that, we had the top, some chop, and we've been working our way down since then. 100 to 1,000 Bitcoin wallets, $2.75 billion worth of Bitcoin accumulated, 43,000 Bitcoin, 1,000 to 10,000 wallets, 80,000 Bitcoin accumulated. And then the 10,000 to 100,000, 91,000. So what are the smart players doing right now? It's not over for them because they're accumulating. And what did we just talk about? Yes, there's some long-term holders that as we just highlighted. Where is it at? There were some long-term holders we saw with the value days destroyed. There were some long-term holders that have been taking profits, somewhat de-risking as we get up to this previous all-time high. But we're seeing some of the most important players in the space right now have been stacking here, meaning these smarter players are looking for riding gains from price action going higher than where we're at now. Then, of course, we have to talk about altcoins. Altcoins love to touch the weekly EMA 20 line in the bull market before continuing upwards. This is similar to what we're talking about. It's a very different metric, but a similar relationship with the 20, the weekly 20 exponential moving average, as we were just talking about with the short-term holder cost basis with Bitcoin, how it regularly touches it on the way up. You see this? Comes down, touch, 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 a little deviation at it, kind of short of it, touch, 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 all the way up until ultimately we lose it, come back, reject, and we're in a bear market. Similarly, we have pushed up, we've touched once, we're currently touching twice too. It doesn't mean we can't have that deviation below. It just means there's not a lot of things that are suggesting super bearishness right now, other than in the small time frame, potential lower targets that are presenting opportunities. So then what does that mean for right now? What's the sentiment of the market? Here is the Bitcoin chart looking at the aggregated premium. And we're seeing this kind of dip down here into the red. And what do we see? We showed this to you the beginning of the week. We can see right here, option V. This dips down into the red, launch. The market likes to trick the most people. Now, this doesn't mean it's going to be immediate because look at all this. Look at how people were still not convinced of the bull market here. So much negative premium here. So many people are shorting. That also explains why the price action was somewhat truncated and just kind of moving. It's just chopping sideways. This was a sideways range for essentially 217 days. Now, yes, that was about a $7,000 range. See? 6,000, yeah, $7,000 range. Down, up, and then release. But this was because the sentiment hadn't yet shifted. Now we're getting bullish and we're getting these dips in terms of also these premiums, but this is also furthering what we were just saying about this opportunity that's brewing. Now, again, I'm not saying go and throw it all in right now. I'm saying we're in that opportunity zone that you should be considering how you can stack into the positions of the coins. Maybe you have some of those coins that you bought higher. Which ones do you really believe in for this cycle? You can be adding positions, lowering your average entry. We can see right now, we talked a little bit about that Wyckoff likely chop, maybe some sideways action for the next month or so, maybe even 2 months, maybe even 3 months because of those previous cycles. We talked about it right here, halving cycle. We've seen this sideways action has happened after each one of the halvings. And then we come over here and we talk about this is the Bitcoin price on cycles scaled by these realized prices all lining up. And we see based like on this metric, this pink line, I want you to see this pink line that's flashing. This is the cycle we're currently in. We're actually on the precipice of potentially going lower than we have been in previous cycles. So as much as some people say we're so much higher than we've been in previous cycles, it depends on what metric you're looking at. When we're looking at metrics that really give really honest context, like realized price, because this is based on all coins that have traded, this is suggesting we're kind of coming down into the lower bounds of where we've been in relationship to the realized price than in previous cycles. Now, in addition to all this, we see what's going on with the dollar index, had that breakout, retest, continuation, but maybe there's a signal here. If this does roll back over, maybe this is topped out. Maybe the risk narrative is about to come back to the markets, meaning money coming back. But we're going to have to keep an eye on this. NVIDIA still sort of consolidating a little bit. If you actually look at this, we're talking about this because this is having an impact on the general risk narrative of what's going on in markets. So this kind of looks a bit like a large bull flag or a falling wedge. If this is able to hold up and hold in the zone and actually break out, this would be great signal for especially all those AI plays that we're holding, Render and AGIX and Ocean and Fetch and GRT and Matrix AI and Purple AI and POW. There's so many different coins that are going to be paying attention to what's going on with NVIDIA. Then we see S&P 500. It's not just crypto. It's not over for crypto because you see some drop. We also see in the spider, in the S&P 500 ETF, look at this. It's been pulling down, and we've talked about this correlation before. If we come over here to S&P versus Bitcoin, we can see, oops, I don't know what I just did. Yeah, here. We can see these are running in tandem. Whether or not you believe these things should be running in tandem, you cannot deny the data here that suggests, yes, Bitcoin should be something you should be putting money in when you're scared of everything. But there's a hell of a lot of people out there in the world that literally only use this as a risk analog to take volatility strides to make profit. There's some of us that are like, this is the future. But this is not a religion. This is not a cult. This is free to how every independent person out there that's trading is going to trade this. And right now, as Wall Street is entering, they see profitability, not profitability, profit ability to be generated by trading the volatility in this market. And so we cannot deny that these are running directionally in tandem. And we see it's not Bitcoin failing, not something crazy going on with crypto. The markets in general are in this state of uncertainty based on what's going on globally. That's what we're looking at right now. So what do? Well, first thing you do right now, we got 196 people in the room, and I want each and every one of you to let me know what the last thing you bought was in the crypto market. Drop it in the live comment and drop it down below if you're watching later. And then do crypto some love and service and hit that like button. Subscribe and join us here in this family. We've been growing like a rocket this last month and a half, and I appreciate each and every one of you. And again, my name's Kelly Kellum. I appreciate you being here. Let's look at some charts before we go. All right. Information, we've talked about this. Let's get down to the 2 hour. Let's go to the 4 hour. Let's look at the data that we want to look at right here. First things first, what's the money doing? The money had a huge impulse as the blue wave. It came down, went negative for a second. Smaller wave here. This was already a leading indication. The bulls were not as convicted as they were before. And then what do we get? Smaller wave here. And now we're pushing down into negative money flow. Now things can switch on a dime in the crypto market, depending on the right news story, depending on the right buy, depending on all this. But generally speaking, as we were talking about, we're watching a little bit of a sell-off in the markets, broader markets as well as crypto markets. So let's not trade based on the hope of a big news story. Looking at this is showing negative money flow right here. We see the momentum wave came down again. We want to watch what happens with this momentum wave if this rolls further down, because we can see, let's turn on the indicators here. Look at these calls, boom, reverse, up, shift, down. We're right on the precipice of potentially a bigger move to the downside. We have this buffer right here, 59,000. If we lose this $59,000 to $57,000 region, I'm looking for that opportunity down here at 52,700, 53,000. But we haven't yet broken it. Currently, all we're doing is ranging. Ultimately, what I'm watching, if we do push to the upside, if we do rebound, don't get excited because we get a little move to the upside. We have this 20 moving average, this little ribbon right here. If we can't even clear that, that's going to be ultimately very bearish. If we come up and get rejected to that, then I think very likely we're coming straight down and likely further. If we're able to push up through this, up into this trend signal line right here, this red line, and also I would call it this sort of zone actually, this trend signal line and the weekly VWAP. Click 7 times for it to work. There we go. Which is right here, basically 63.8, 63.2 to 63,300 up to 63,900. This region, because we have this trend signal line, which is a 50 moving average with a bunch of code to also show you the trend. We have this dynamic resistance zone as well. And then we have this weekly VWAP right here, which has been our bellwether and whether or not we're going bullish or bearish in moves. We cannot consider any real bullishness until the price action comes up and takes out this, let's call it $64,000 level. And then we have to reevaluate. Because there's a lot at stake right now, and there's not only the next 2 days, but the next month and a half. We already know, we've talked about the previous halving cycles. Consolidation has happened afterwards. We have big news that's come out with all of these Asian ETFs, and we want to believe they're all immediately bullish, but let's look at what happened to Bitcoin on January 10th, January 11th. January 10th and 11th is right here. See this right at the bottom? January 10th, option V, that's January 10th. Now double click here, put it in auto mode. What happened? Coming into this, strong speculation into it, information, and then the sell-off on this news. Big news tends to have a positive impact on price over time. You have the speculation into that news, right? If it's going to happen and as it happens, but then there tends to be we've heard it before, but buy the rumor, sell the news. And we're also coming into this contentious period right here with the halving just 2 days away. And we have all this global uncertainty. So let's pay attention to these opportunities down here, not being things that scare us, but present opportunity. Now, before we go, let's look at Ethereum. And we see, look, we got too many. Well, what was I doing? These are all the levels that we have marked out. And let's look at this. It came down to this level, came down to this level. I mean, golly, it came all the way, almost to the dot right there on that level right there. Now, the next level down is this 2708, which is here. Are we going to get that? Let's move this over there. Let's delete this. Let's delete this. Let's leave that. All right. Now let's delete the Fibonacci. Fibonacci. And this is that level. Look at this. Beautiful bounce, beautiful bounce, beautiful bounce. Immediately fell through, came up and rejected at this level, telling us that the bears are trying to be in charge. We lost this macro resistance, previous resistance trend line that we never really tested until here. We just bounced along it until we lost this level. lost the level, got rejected. Look, right up in here at the weekly VWAP. We kind of deviated beyond it, but could not get through the trend signal line, got rejected right here at this level. Came down, tried to come back up. Where we get rejected, yellow line, weekly VWAP. Come back down. We are setting up for two strongest possibilities right now, which is this potential W formation, which we want to pay attention to. But if we lose this level, then I'm looking to come down here into the $2,700 range. Now let's go to MATIC. I've been layering into MATIC this last month, and it just keeps giving better and better opportunities. Am I frustrated by that? Hell yeah, I am. But not really. My impatient side of myself was like, oh, I just want it to moon. But then, the person that's been in these markets for years is like, all right, I bought it. It's going further down. Well, I bought it because I have conviction. It has some of the most partnerships of everybody in the crypto ecosystem. MATIC and Chainlink are probably the two strongest cryptos outside of Bitcoin and Ethereum. God dang it. Because of that, because of all their partnerships and their integrations and their tech. So I'm not worried about this. What I do see right now is we do have a potential W formation here. We do have negative money flow, but we have a W formation with a higher low currently. Now, if we come down and lose this, then that will likely come down in one of these, this order block from previous price action, this green box that automatically comes on here with the BitLab trading stack, 53-cent level, be a good opportunity to stack in more. Unfortunately, I'm not DCAing in again until around May 1st, May 2nd. So does that frustrate me right now? Part of me wants to figure out, no, I'm going to shortcut it. No, I have a strategy in place. I'm going to stick to my strategy. And if price is lower, I get to take advantage of that lower price. If price is higher, then I'll wait for another pullback. Avalanche fell out of this falling wedge, came right down to this level that we talked about. And now look at this wick, came all the way down to this other level that we had lined up. And we're kind of hovering in this order block region right in here. We want to watch for a break above the 35, basically 36 level. This is a weekly VWAP, which is a $36 to $37 range, which is the weekly VWAP in the trend signal line. If we can clear this, then we still need to contend up here at the $40 range with this previous support potentially being resistance. Things are looking like we got some work to do in the short term. If you do see price action move to the upside, look to the known levels in the weekly VWAP to give you an indication if we're actually going bullish or if it's a trap to the upside before further downside. Solana melting to the downside, came down to that 169. Nobody thought it was possible when we were up here. We came down to the 150. Nobody thought it was possible. We've had these things mapped out, and look where it came down into. Came right down into this mark that is on here with the BitLab trading stack. That's high volume, basically zones where volume reversed from buying pressure to selling pressure. And then also we've created an order block within this, and this is just working its zone. We're watching $140 region. The next level up is going to be here in the $150 region before we can really be bullish. And I mean that if you're looking for a trade for a longer period of time. If you are trading in terms of like a 15-minute chart, a 1-hour chart, a 4-hour chart, this is bullish in terms of a potential trading reversal up into this zone, but you need to know what strategy and what time frame that you're trading in order to know what strategy you should be using. So this is looking to form that bullish W right here. And if we can clear this 140 range, I'm looking for the next level up, 147 to 150. And then the next level up from there will be, this, you can extend this across up here in this $158 range. AERO, we took a bunch of profits on this, took profits on this 3-4 times now. I took the last bit of profits I took was up here about the 208 range, 199 and 208 range. And I rotated that into some other plays. Now this is dropping, which is good because I really love AERO. I do. Coinbase, it's on base. I think it's going to get a little bit of a DEX nod from the ecosystem, potentially even everything going on with Uniswap and all that. This has a huge amount of like astronomical growth on their TVL as well as volume as well, just everything. If this does dip down and, especially if it comes down below the $1.35 region and comes lower, maybe into the 84 cents range, holy moly, I'll be layering up in here if that's the case, because I do think this is going to have an incredible future, especially considering Coinbase has, I think, nine or more of the ETFs custodying their Bitcoin, as well as being the sort of the exchange of choice broadly in the US. We do see some negative money flow here, though. Near, got too many lines on this chart also. All right. Hit all these targets on the way down. And look, came right into this target that we had drawn. I hadn't looked at this chart in a couple of days. Came right down. Now we have this kind of ugly roundingness. There are signs that there's a potential bounce coming, but I'm very wary of a price action move to the upside until we break through on any coin you're looking at, the weekly VWAP as well as the trend signal line. And ultimately, this zone right here, 634 sort of range, because this is the previous low. So even if the price action does move to the upside, we need to clear these range lows, come out, find some support, and continue if we're expecting a bullish continuation from these zones. But that's what I'm seeing. That's what I'm feeling. I do want to shout out Arculus, channel sponsor. Big love to them. They're helping keep things going here at the Hit Network, Discover Crypto, BitLab Academy. And I'm not only saying this because they, we are powered by Arculus now. I do want to just say it's my favorite cold storage wallet. You can check them out in the pinned comment in the top of the live chat. You can also go to getarculus.com and you can just use that code DC20 for 20% off. It's an awesome, incredible biometric tied with the card. You get it in a box like this, you open it up, and you basically have, it's almost like a credit card. It's the same person that developed this, that developed all those chips that you see in all those cards, and that near field communication. I mean, genius product. And I do think it's the best cold storage out there. And if you lose a card, it's not the end of the world, because all the wallet information is stored somewhere else with your seed phrases and all that. But it makes it very easy to navigate your cold storage and also store things securely. So big shout out to Arculus. Getarculus.com, DC20 for 20% off. But with that being said, I love you guys. I appreciate you all. I hope you all have a wonderful day. I'll see you in the Discord. I got some really big things working in the background, so I apologize. I've been a little scattered with some of my activity in the Discord. But shout out to John Dalton in there, Corduroy, Joshua, Jake. We have such a wonderful Discord premium community there. So big love to everybody that's involved there. And thank you to everybody that's a member here. I love you guys. That's all I got. Adios. Adios, muchachos. Thank you for coming. Thank you for always tuning in. BitLabAcademy.com. Hit that like button, sucker.